And Dinesh, how are you doing, guys? Let me get this there. I'm doing well too, thank you. Okay, so think we can start. So guys, I'll go through one trade for everyone for now, while the members are still coming. If we don't have a lot of trades, I'll go through the rest of the trades because sometimes it's just unfair for members who come late and I can't catch up their trades. It will be one trade for everyone if you have time, and I think we might have time, but we'll see. I will go through the rest of the trades, okay? Hey, you guys on YouTube? So let's start right now. First trade, it was for Ethan, and let's see what Ethan did. Ethan, were those all long, stop out, long, stop out, and finally long, which actually worked out? Or there was a long, short, long? All long. So let's see, I know. In the pre-market, not a bad uptrend, right? And when we see a stock going to the upside, we usually expect a pullback, right? Especially if it's like a third or fourth continuous candle. And this right here, it was the fifth continuous candle. So if it immediately opened and started popping up, I would avoid this trade because it's breaking my rules, and I usually include the pre-market price action with the price action which is happening after the market open, right? It's still, I mean, if it was going up, it will not just go straight up, it needs to do a pullback. And you see that right here, it did a pullback and it started coming back up, and by this moment it looked like a small hammer. I think that's what got you biased or made you enter where you entered right here. I was watching it to the long side as well, but I didn't like taking it to the long side because of this flat resistance right here, right? You see it? And I told myself that I might take it to the long side, it might hit this flat resistance and then drop back down. So I would personally have avoided this one, and I did avoid it because of this flat resistance right here. Now, next entry, you take it to the long side on higher, lower highs. Remember what we said? What is the end of the pullback? The end of the pullback is the moment it's making a new high. So right here, it's not bad. I mean, it's the first candle. There is no new high yet. Of course, better if you waited for the break of this candle right here. Then you could tighten your stop loss, because if it's breaking the high of the day, or if it's breaking the pre-market level, it's usually running. There is nothing above it, right? So the safest play right here on this candle specifically was waiting for the breakout, and once it's breaking out the pre-market level, you are taking it to the long side, you are tightening your stop loss, and you could just ride the momentum. Right here, you just took it to the long side on the face of the resistance, then you are taking it to the long side on lower highs. It could have just simply on the next candle did the same thing, a lower high, and you would have been subbed out. Like the next one, same thing. I know why you took it to the long side. You see it buying pressure right here, you see buying pressure right here, you see it strong in the pre-market, but a little bit of confirmation wasn't there. Hey hands. Now this entry, it was good. At least here you're having a new high, right? And you also notice this pre-market level at which you start taking partials. I wouldn't have taken a partial right here if it wasn't a 2R. And I think if you took it to the long side right here, stop loss should have been at least technical stop loss, at least the view up, or at least a new 1 minute low. So this was a 1-to-1 trade. And after getting stopped out twice on it, you don't want your winner to be small. You don't want to exit at half R winner or 1R winner. You want to make up for the losses. You want to keep your losses small. Exit at 1R, that's fine. Exit at another 1R, totally fine. You're still keeping your losses at your tolerable risk. Then the moment you're getting into your winner trade, you want to make up those losses and more. You need to hold on and be patient, because finally you caught the right direction. You're taking it to the long side, stop loss down there. Now hold it for at least 2-to-1 to make up those losses if you are patient. And you could see this candle right here, it's showing strength. Look at this previous resistance, after the breakout is acting as a support, like literally to the penny, and bouncing out of that. This is a really strong sign right there. I wouldn't have taken a partial at the break of the hammer. I would have held for more. This is a bullish candle, right? It's breaking up, pulling back to the previous resistance, acting as support, and getting pushed back up to the high of the day. The moment it makes a new high, there is no levels above you, right? It could just simply go up all the way to the round number, or maybe above that. So you could have just simply held onto it or started taking partials a little bit above. Looking at this move, I think you made at least 2 Rs, right? And you made those losses right there. Now this entry right here, I wouldn't have taken it. And guys, can you tell me why? In this case, this entry right here was decent. If you wanted to get in earlier, the first minute or 2 minutes, an entry above it or at the break of 27.20 would have been good. But since it made an ABCD pattern somewhere right there, that was good. I see why he got in right there. He got in there for an ABCD pattern, right? Hammer, new high, this looks like an ABCD pattern. But why wasn't this a perfect ABCD pattern? Yes, Ryan. Exactly. It's extended from the 9 moving average on the 5-minute chart. Wait for a W shape, that's good, but you wait for a W shape when the pullback is so big like this. This pullback right here, that's so big. It's forcing itself to the 9. If you want to take it to the long side on this ABCD pattern, or let's say it's making a new high right there and you want to take it for an ABCD pattern, you would definitely want to see a W shape. But right here, this is an ABCD pattern on the 1-minute chart when it's already extended on the 5-minute chart. The price action was happening here. That wasn't there, right? This was a third continuous white candle after the market open, right? 1, 2, 3, and it was extended from the 9 to the 5. So we try to avoid those ABCD patterns. And why do we avoid them? Because we are not sure how much they are going to move after the breakout. If they break out. Sometimes they could make a double top. Like in best case scenario, it could make a double top, then go against you and you could exit at break even. It could fake you up. And the worst thing is that it's making a new high, you are taking it to the long side, and then it just simply gets stopped out. When the stock is extended from the 9 to the 5, the best thing to do is to wait for a parabolic reversal to catch the move to the downside to the 9 moving average in the 5-minute chart. Would I have caught it right here? Not really. Was this a good entry to the short side? This was decent. You are having a double top with the second top lower than the first one, having a reversal candle at a double top, new low, you take it to the short side, stop loss above the bodies, right, or above this body right there, and then go for the move. So a short play right here would have been better, not here of course, here once it's making a new low, but an ABCD pattern when it's extended, it's better to avoid it. Still good long right there, and I think you did make 2R on this move because this was a decent move. What are your partials? 10%, 20%? Or they're different? So this one is for there. Don't mind the terrible misclicks on the partials. Okay, I'll see that. Okay, good job, Ethan. At least that. So there, let's see what you did right there. You traded SPCE, and I see you had a little bit of hard time down there, like me. Or this was short. It was a long, wait. It was short right here, and you took some partial and exited for a loss for the rest, I guess. Misclick, right? This right here. Okay, so we'll avoid this one. And I see here you try to take it to the long side after the hammer. I personally would have avoided this trade. Let me zoom in. First of all to the 5-minute chart. First we go through the bigger time frames, right? We try to find a setup on bigger time frame, and then we execute our entries on the smaller time frames. So on the 5-minute chart, at this stage, I look at it as a reverse ABCD pattern, and it's making a pullback to the 9 moving average on the 5-minute chart. So I would avoid taking it to the long side closer to the 9 and the 5. I mean, those are my rules. I'm sharing them with you. But when the stock is so close to the 9 and the 5, I don't take it against the 9 and the 5 unless there is a setup for that, or that 9 moving average is my target, because most of the time on reverse ABCD patterns, especially at the open, stock is bouncing off the 9 moving average on the 5-minute chart. ABCD pattern. Okay, now let's go to the smaller time frames. We don't see a setup here. I would have avoided it, but I see why you took it on a smaller time frame. You see that it's so strong. You see it's making a new low, closing as a hammer, so you are taking it to the long side right there and taking some partials. It's slightly worked out, but look at it. It's just a really small move, right? And it could have just simply not made it, because the pullback isn't always literally to the 9 and the 5. Sometimes it's a little bit below it, sometimes it's a little bit above it, which was in this case. Sometimes it's bouncing out of it, so it's not worth risking it. The short though was good. Why is that? It's bouncing literally off the 9 moving average in the 5-minute chart. You see a reverse ABCD pattern right there. One thing is it was a parabolic pullback right there. So I would have been a little bit careful about it, but still, you see the buying wicks pressure, the doji right there, not bad right here. You take it to the short side. This is actually a good reversal, parabolic reversal. I don't know how we missed this thing, but anyway, you take it to the short side. The short side is at least is more tolerable. It's better than the long side there, and this was amazing patience right here. You held it perfectly. One thing I would have done is taking partial closer to the low of these candles. Why is that, guys? Why is it like not a must? I mean, it's good that he held right there, but for safety, why is it better to try to take partial closer to the body, not at the low, closer to the bodies right there? Possible reversal. And why is this candle right here might be a possible reversal or a possible double bottom or a support? I know it's a hammer, but other than it being a hammer, why is this area important right here? Usually an ABCD pattern or reverse ABCD pattern, those are breakout setups, right? So we wait for a breakout before we're taking partials, and that's what you did, but there is a reason right here. Yeah, that's it. Low, Carper and Duncan, TC. Yeah, perfect. See, this is climactic volume. This is an obvious climactic volume. It's above the average, or more than double of the average of the previous volume bars. It happened at the low of the day. Stock bounced out of this level, or stock reversed after this climactic volume right there, and it made it all the way to 9 to 5. Now, reversals, it's so rare to have them like V reverse all the way up, right? They need to make pullbacks, so they could simply drop down, make a higher bottom right there out of the body. And why don't I use the wicks? Because on parabolic reversals, just from an experience, from what I see a lot, if they work out, you don't need to have stop loss at the low of the week, because if they make it to the low of the week, they usually break it with slippage, and if you hold your stop loss at the low of the week, you will get stopped out right there. Having it at the bodies, most of the time, if it's a good reversal or if it's strong reversal, they don't make it lower than the bodies, and tighter stop loss works better on that. Now, this increasing volume, was this climactic volume, or why is this volume increasing right here? Why do you think this volume is increased? We are not sure about anything, but we could just guess why we have an increasing volume right here. Could be covering, but not. Climactic volume is an increasing volume. It's obvious that it's at least 2 times bigger than the average previous 10 bars volume. It's showing you that there is a lot of price action happened at this area. A lot of scalps, a lot of covering, buying, selling, that's it. Volatility triggers. Yeah, this could have been people getting stopped out. Those people who are having their stop losses, hard stop losses, at the low of the day, or having their stop losses at the low of the weeks. Once it's hitting them, they all those stop losses get triggered. And remember, stop loss is a market order, right? So once stop loss gets triggered, they start getting filled, and it drops down with an increasing volume. And you could see that this bar right here, people getting stopped out, volume increasing, and then it didn't continue dropping down, right? It's not people shorting in right here for a hold. If it was people getting into the short side or doing some price action, it would have continued dropping lower and lower and lower. But here it's only one big bar which dropped down, and then that's it. It held it and reversed, right? So it was stop losses getting triggered, which caused the volume to spike and drop down. It wasn't people shorting right there. That's why I just simply held on after that down here. And look at this, now down here it's starting to hold. It is extended from the 9 moving average on the 5-minute chart. You see again, extended from the 9 moving average on the 5-minute chart, making a new 1-minute high. He took it to the long side, got stopped out, re-entered one more time, and started partialing all the way up. I'll share my SPCE trade with you quickly. It was similar to this one, but I guess I got stopped out a little bit more. And I'll just show you that why you need to hold on sometimes for your winners. So this is my SPCE trade. I see it dropping down. I see it extended from the 9 moving average on the 5-minute chart right there. Hammer at the low of the day. New 1-minute high. I take it to the long side. And what's my stop loss? Never the low of the week. Since I didn't have a candle below it, I just decided to give it a few cents down there. Usually if I have a wick down here, let's say I have a wick down here, this will be my stop loss. If this wick was shorter, this will be my stop loss. That's what I'm doing. I'm not using the low of the wicks so that I don't get caught in these type of price actions. Instead of risking 10 cents or 5 cents, I'll end up losing 35 cents, which is way more than I can tolerate. Now, I see that I get stopped out, but I see that it's not making it to the low of the day. It's not weak. It's getting bought up one more time and making a new high. So I take it to the long side, and now my stop loss, the defined wick, exactly right here. What's happening? I'm getting stopped out to the penny exactly at this wick, but the setup is not failing, right? We're having 3 candles at the low of the day, 3 reversal candles, but this time I don't want to take it on a new high because my stop loss will be too much, 13 cents, 12 cents. I don't want these huge or type of stop losses. I want to see it breaking the consolidation area. I want to see it making a new high without wicks, breaking the bodies, because right here we're in a range of wicks. I want to see it breaking so that I can tighten my stop loss. And right here, I see that this bar was bullish. It was not an indecision candle. 3 indecision candles, no buyers, no sellers won. Here, the buyers won. And now it's making a new 2-minute high and a new 1-minute high. What am I doing? I'm taking it to the long side. I'm tightening my stop loss finally, better than 12 cents. And I'm taking partials all the way up. This is not too much. I had only 30 shares left right there, just for practice of holding. Held it to the pivot point of the body of the high of the day. So let's see the next trade there. Ken traded AMD. Yeah, this one, right, Ken? Perfect. So let's see. You take it for an opening range breakout plus an ABCD pattern. What's the problem with this trade, and how can we find the ABCD pattern setup? I mean, any daily routines or scanners, because I find it's hard to find a good ABCD pattern. So ABCD pattern is usually a trend continuation. If you want to get into an ABCD pattern, you're going for a trend continuation, or you're trying to find a trend either on the daily chart, either on the pre-market, or wherever it is. You need to find a trend and then wait for a pullback and a new high. Here, you took it for an ABCD pattern on the 5-minute chart, right, to the long side. The pre-market, though, was downtrending. So why wouldn't this be a setup for a reverse ABCD pattern, right? It's just a little bit tough if you combine both of the price actions, right? Now let's see what happened here on the 1-minute chart. This is not a bad ABCD pattern. It's going to the high of the day. One thing I don't like, a reverse hammer at the high of the day. It's pulling back and making a new high. It looks like an ABCD pattern with a 5-minute open range breakout. Now this is fine. I like it. One thing I don't like right here, the moving average right above me. If I have a moving average ahead of me right there on the 5-minute chart, and the downtrend was to the downside in the pre-market, I will assume that on bigger time frames I'll also have a lot of resistance ahead, right? Let's see if we had that. So yeah, you see this? On the bigger time frames, we're also having moving averages ahead of us. And that's why I will be a little bit hesitant taking it for a trend. When you're getting for an ABCD pattern, you go in with the trend. And when you go in with the trend, you want to see that the trends, the moving averages, because moving averages are showing us the trend, are in our direction, right? And remember what I said? It's easier to catch an ABCD pattern to the long side when the stock is uptrending on the daily or at all-time high, and it's easier or better to catch a reverse ABCD pattern intraday when the stock is downtrending on the daily or at all-time low. Okay, now here on AMD, on the daily chart, it's downtrending. It broke the $53 number. No, it actually didn't break by that time, but it was sitting at the break, 53.40, and right here it actually broke at 53.34. Yeah, it did break it. So it did break it right there. It's sitting at support area. It bounced and it went to the upside. Maybe this pop up right here was people taking profits at the open or taking partials and just a spike up for some scalp. But this wasn't a trend. We can define a trend right at the open from 1, 2, or 3 candles, right? A trend is a strong move. 15 minutes, 20 minutes, 30 minutes, maybe an hour, 2 hours. That's trend. And then we are waiting for a pullback and we are getting with the trend. But 3 minutes, this is not a trend yet, right? Still an ABCD pattern for with a pullback, but against the moving averages, a lot of resistance right there against the daily chart with a 5-minute open range breakout. So this wasn't a bad setup. It was an ABCD pattern on the 1-minute chart with a 5-minute open range breakout, but it wasn't an A+, it wasn't perfect because there were also some stuff which are telling you that this is a short, right? Yet I see I didn't make all the losses on that trade. And how can we find? I'm working on a scanner for an ABCD pattern. It's so hard because it's not consistent. You want the scanners which we make or which I usually have to have a decent win rate so that people pay attention to them, so that they are not ignored, and it's easier that way, not to force trade. If you have a scanner for that, you'll be just simply waiting for the call, and once you have that call, you'll be seeing if it fits you and then get into a trade. So working on a scanner for an ABCD pattern, not really good yet. Once I'm done with it, I will release it. Zachariah or Zach from our community, he made a scanner for an ABCD pattern. It's decent, but it requires a little bit of more adjusting. But again, once it's ready, it will be shared. Ivan, let's see what you did there. So Dal, you traded this thing to the long side. Now this thing is choppy, right? Look at this, selling pressure week, selling pressure week, selling pressure week. Huge move to the upside. I mean, first trade at 10:31. So this is it. ABCD pattern. It had been strong in the morning. I see this. This is amazing. It's been so strong in the morning. This is actually not a trend right there. This is a reversal if we just want to be more specific about it, right? It was dropping and then it reversed, but yeah, it's okay. It's still a trend to the upside. It pulled back to the 9 moving average and looked like a W shape was forming, so you took an early entry with a stop below of the wick and you get subbed out. So I see what you did right there. On the 1 minute chart, it looks like a W shape, but remember guys, when we have a setup, only a picture is not enough. Why do we usually trade patterns? We trade patterns because there is something behind those patterns. There is a price action behind them. An ABCD pattern, strong move to the upside, small pullback to the downside, and a continuation. What is an ABCD pattern? A lot of people are taking it to the long side. Resistance, people starting to take some partials, and scalpers start to take it to the short side, which causes a pullback. This is not a reversal. This is simply a pullback. The pullback is just small. Once those shorts start taking their partials because they know that the stock is strong, those longs add up to their position, move their stop loss, and the stock continues to go higher. This is the ABCD pattern, right? Head and shoulders pattern. What's the secret behind it? Stock is so strong and it's uptrending. It's making a small pullback, not strong pullback, but small pullback. People assume that this is trend continuation. They add to their position, or maybe they are getting in. It's breaking the high of the day. Everything is so good, and it's just holding it's not continuing the uptrend. It's heavy, it can't go higher, and it starts dropping back into the range. It tries to push one more time again to the upside, but it can't make it even to the high of the day. At least here it did break it, but it wasn't so strong to continue the trend. Now here it can't even break it can't even reach the high of the day. So there is a head and shoulder pattern. This is a reversal pattern, and it drops down, right? So we call it a head and shoulder pattern. It's not weak because it's a head and shoulder, it's weak because of this price action which is happening right here. So pattern alone is not enough. Looking at this right here, we do have an ABCD pattern, but this is an ugly ABCD pattern. The price action behind it is not so clear. There are a lot of wicks right there on the top. There is a strong resistance from which it bounced. It tried to make it a few times to the upside, but every time it goes to the upside, it gets sold off. Now here it finally broke those wicks right there, but again it got sold off, right? So this is a heavy price action right there. It's just wicky. And I don't like this ABCD pattern only because of how these candles right here look like. Okay, now you are taking it to the short side. The short side is not bad. Second trade at 11:04, reverse ABCD pattern. Price had broken below view up, and I saw that as a trend change from bullish to bearish. That's good. Shorted it on a new 1 minute low after view up rejection, partial 2R or 3R. So right here, this wouldn't have been a bad short. If you take it to the short side, even right here, this would have been like perfect entry to the short side. You're having a flat support area right there, classic double top, right? Support right there, it's breaking down. Small reverse ABCD pattern as a confirmation for the double top setup. Once it's breaking down, you're taking it to the short side. It's dropping down, pulling back to the 20 moving average. Now it's really downtrending because it just tried to go up. If it's not going up and it's clearly trading intraday, it will go down, right? It's not going up, it's dropping down, making a pullback on the 1 minute chart. You're taking to the short side. Normally avoid these trades because this is like a third or fourth continuous candle. It's not bad though, and I usually get my entries only after confirmation candles, so I wouldn't have shorted it on a new 1 minute low. If I was really short buys on it, I would have waited for a reversal candle or for a confirmation candle, which is a 1 minute reverse hammer right there, and then took it to the short side. But still, this wasn't bad, and then you took your partials all the way down. I'm not sure what's okay. Then hotkey mistake. Then you tried shorting it one more time. Not bad because you're waiting for a pullback to the 9 and the 5 minute chart, but this is you see a parabolic move right there, extended from the 9 and the 5 minute chart, double bottom, double reversal candles. Not bad for a long here or here, and then on a parabolic pullback, you don't know if it's simply a pullback or a drop. It's usually better to wait for a W shape, which you had right here. But since this was a huge move on the 5 minute chart, better waiting for a W shape on the 5 minute chart. I'm in an ABCD pattern. How can I go long starting from point A? Why other traders can go long from A? You mean from here? Well, it's tough to say where or when the move starts. Sometimes maybe there is a pattern, maybe there is an algorithmic trading. That was Dal, right? Maybe there is some key level. Let's see why Dal reversed right there, if we can see it. Okay, now we can see why we can take it to the long side from point A. I don't like the daily because it's downtrending. It would be a little bit aggressive, but look at this. In the pre-market, it's downtrending, right? It's so weak. What do we have right here? Extension from the 9 moving average on the 5 minute chart, right? You are having a fake breakout of the pre-market low, a fake breakout of the pre-market low, and it's squeezing up. You could take it to the long side right here, take it for a scalp. It's dropping down, and now look at this. It is still 25.50. It is still extended from the 9 moving average on the 5 minute chart. It's around 40 cents from the 9 moving average on the 5 minute chart. A reversal candle, double bottom of the 1 minute chart as confirmation with a fake breakdown of the pre-market low. New high, you could take it to the long side, which is the point A, right? And then it depends on how good you are at holding and how good you are at adding to your positions at key levels. So this was catchable right here. Risky a little bit, but reading the price action, it's possible to catch point A. View up could be your target if you are getting it down here, right? With around, I don't know, 5 cent stop loss. How much is that? With around 5 cent stop loss, view up is like 30 cents away from you. It's like 6 hours right there, right? Ah, you mean to the short side down here? No, I wouldn't be really concerned about VWAP. I'm concerned about VWAP only when it's respected. If I see a stock just going through VWAP as it doesn't exist, I wouldn't be really much, I wouldn't really care much about it. Is it a fallen angel? Fallen angel stop is usually traded on low floats, not on high float stocks, and DAL has billions or millions of shares, so I wouldn't really call it fallen angel. It does look like a good 5-minute opening range breakdown down here, right? But I don't love taking 5-minute open range breakdowns or ABCD patterns or reverse ABCD patterns against hammers or shooting stars unless those are my targets. They do work, but again, from an experience, most of the time when we take a reverse ABCD pattern against a hammer or an ABCD pattern against shooting star, I get stopped out. A lot of rules because of which I don't catch a lot of moves, and you could see that today on SPCA. What time was that, SPCA? Because of the bunch of rules I have, I wait for a long time before I finally catch my perfect step. It's been like 45 minutes before I caught my perfect step. And look at these 2 losses. If this third trade was a loser, I would have been at max loss for the day, right? Because my max loss, you know it, is 3 hours. And if I got stopped out right here, I would have been waiting for 45 minutes only to get to max loss eventually. But I would have been fine with it because I respected my rules. I like the setup. I tightened my stop loss because that's my rules. That's how I trade. And I lost for the day. But luckily this trade worked out. But again, I mean, a lot of rules. I missed some moves because of them, but it works for me. This is perfect. I love it. Whose trade was this? Lenny. So look at these guys. mRNA, something similar, right? It's dropping down, breaking the pre-market low. Looks like a fake breakdown right there. Closing as a hammer on the 5-minute chart or on the 1-minute chart. Not a bad long for short squeeze. It's going to the upside below daily level. Not a reversal candle. I was watching mRNA. I was tempted to short it right here, but the wick from the bottom was bigger than the wick on the upside, and this is why I just simply avoided taking it to the short side on any 1-minute low. I really regretted it because the drop was really nice, but nothing to do there. Anyway, now what do we have right there? We're having an engulfing, right? Stock going to the upside, bouncing off a daily level, making an engulfing, and look at these 3 confirmation candles. This is really good to see. 1, 2, 3, and he is taking it at the break of the flat support right there. Your stop loss would be somewhere around there, or that's where I would usually put it. First target closer to the hammer, not the low of the hammer because I hate it. Sometimes it just doesn't reach it. The low is the first partial. Started taking it closer to it, and then it just continued going lower, and Lenny started partialing all the way down. So yeah, this was fantastic. Good job. Adham, let's see your CCL trade. So you traded CCL again, bunch of chop, right? I see that this is looking like an ABCD pattern right here. A, B, oh my god, this is horrible. B, A, B, pulling back C, right? And then a new high where you took it to the long side and you didn't put the low of the wick as your stop loss, you just gave it a little bit down there. But this pullback right here was parabolic. After we see a parabolic pullback, we usually wait for a W shape before we take it to the long side. Now look at this, it never gives you that W shape, it just simply makes a new low right there, right? So simply, or personally, I would have avoided the first trade because there is no W shape. If it's giving me a W shape right here, for example, I would take it to the long side, but look what happens, it just drops down, right? This right here, it's decent. It's not so good because it's not W shape, but I would go for it slightly. I mean, if you have taken it to the long side here, I wouldn't say it's the worst setup for one reason. It did break down, but immediately got bought back up. And look at this, it's closing every time above the first wave or above the first bottom, which makes it look like a decent ABCD pattern. I don't include the wicks every time. If it was closing down here, I wouldn't say that it's a W shape, but here you could say that it was a W shape because of the fake breakout, and then take it to the long side right there, but it's a little bit weaker from the ups, weaker from the downside. Not an A plus, but decent right there. Here I wouldn't have taken it to the long side, same thing, right? You take it to the long side, you get stopped out, you assume that this is an ABCD pattern, but still, this could be also a reverse ABCD pattern, right? And then just drop down. So I would have avoided this, both trades right here. Here it would have been decent. Right here, decent, not perfect. Looking at the 5-minute chart, it's not so good because of the wicks. Because of the moving averages. Here we also have resistance head right there. But here you could, it's decent, like wicks from the downside on the 1-minute chart. Starting to form a descending triangle right there. It's not a clear descending triangle actually. We have 1 touch, 2 touches, 1 touch, 2 touches, and this is going to be like the 3rd touch, but no 3rd touch from the downside. Still not a perfect step, but even if you take it to the long side here, it's tolerable and it's decent. Is this a good double top? Kinda triple. For a double top, I will not take it. Why is that? I treat double tops like I treat any other pattern, ABCD pattern, double bottom, parabolic reversal. My entries are always after a confirmation candle on a smaller time frame. Right here we're having an engulfing. There is no confirmation candle for me to take it to the short side. Here, if you take it to the short side for a triple top, it's decent because you're having a reversal candle, you're having confirmation candles, right? Here you could take it to the short side because it was a huge move, and then there was a reversal candle, but I wouldn't like it so much yet because it's just going through the moving averages. It's not extended from them. The move is extended, the move is so big, but there are a bunch of moving averages below it. For a double top, it's not good because of this right here. I don't like engulfings. For a triple top, it's decent after the low of this candle. So guys, there are a couple of trades members shared with us. They sent me to the email because they can't make it here. We'll go through them quickly. And then we will review the rest of the trades, okay? So let's see this right here. Amen. Apart from reversals, do you have any other well-defined setup that you use often? So Gurkalo, it depends on how I start my day. I trade everything. I trade momentum, I trade open range breakouts, I trade ABCD patterns, I trade reversals, but I noticed one thing. If I'm trading different setups within the day, I might get to my max loss more often. Imagine I'm taking one open range breakout and I get stopped out. Then I'm taking an ABCD pattern, a good ABCD pattern, which gets me stopped out, and then I take it one more time, or maybe I take a reversal, which gets me stopped out. 3 different setups, 3 losses. If I trade one setup, I have 3 tickets for one setup. Maybe 3 entries for an ABCD pattern, or 3 entries for an open range breakout, or maybe 3 entries for reversal. I will have many tries to catch the same setup on different days. And imagine if I had taken an open and range breakout today, which failed, and then I traded 2 times SPCE, and I got stopped out twice on SPCE. That would be like 3 trades, and I'm at max loss for the day. Because I avoided open range breakouts and I traded only reversals, I was stopped out 1 and 2 times on SPCE. The 3rd time it actually worked out, and I finally got back to green. I'm not at gold today. 1.5 hour up. I will still trade, but I can't see any good pattern there. But I mean, at least I had more tickets to trade. And yes, you need only 1 or 2 setups to be profitable, and I prefer 1. And now I see that those reversals, they are working a lot. That's why I'm trading reversals a lot. If I'll see that I'm having a losing streak trading reversals, I'll switch back to ABCD pattern because I'm also good at ABCD pattern. If I see that the market is not on a trending, or the stock is not really trending, I also just choose where I want to trade those ABCDs. If market is on an uptrend, or a clear uptrend, or maybe I'm trading Roku like I did before when it was on an uptrend, I will trade ABCD patterns a lot in 1 or 2 stocks which are trending. If the market is in a choppy area intraday, on the daily chart, and it's just going nowhere, I will not focus on trend trades, ABCD patterns, ascending or descending triangles. I will focus on breakouts, quick scalps, with the momentum at the opens. Now let's see what Peter did right here. Peter traded Dal and he traded it to the short side, and actually there is a stock being called out on the reversal scanner. Let's quickly take a look at it and see what it's doing. So this is it, LRN on the scanner, extended from the 9 moving average on the 5-minute chart, and I wouldn't take this into short side. Why is that? This candle right here, this candle isn't a reversal candle for me. I'm avoiding it. If I get a reverse hammer, if I get Doji on the 1-minute chart, or maybe later a double top, I will take this trade. I like it, but not yet. I wouldn't really take it now because of this. The risk to reward would be good right there. New 1-minute low right now, like this is decent for a new 1-minute low with a stop loss at 41.60. You will have 40 cents stop loss at 41.20, and you will have around 3 hours to 40, but that's if it goes all the way to the 40. The stop would be a little bit wide. Anyway, so let's see what Peter did. Traded Dal to the short side. Now look at this. This was a reverse ABCD pattern if you combine the pre-market price action as well, but this reverse ABCD pattern was against the low of the wick of the hammer, and it was against a fake breakdown. We did review someone who took a trade right here, or I think someone who asked us how could you catch the point A for the trend. So yeah, I wouldn't take this reverse ABCD pattern right here to the downside. First of all, this is a huge move on the 1-minute chart. Remember, our stop loss should be the level the stock bounced off, or give it some room if you are getting in somewhere in between, right? In this case here, this was just a huge move right there. This is slightly a chase on the 1-minute chart. On the 2-minute chart, you're going against a clearly defined support and a fake breakout. So yeah, I would have avoided this trade right there. Ayman, on average, how many stocks are you watching at the open? Do you often trade more than one RB? Yeah, I do often trade more than one open range breakout at a time. I double click, I have a hard stop, and if the stock gets to my stop loss, I'm out. If not, I just simply continue holding onto it. I don't care about what the stock is going to do after I'm in it. My stop is there. I don't need to pay so close attention to it. I need to pay close attention to it to take partials, but if it goes against me, I'm not scared that it will go so much because I'm not watching it, because I always have a hard stop loss. I think Benjamin also shared the trade with us. He wanted me to review it. Let's take a look at it. Unfortunately, I can't view this one. Why is that? Okay, let's see this thing here. So Benjamin traded mRNA, and let's go from bigger time frames, okay? This is the, where is the 5-minute chart? Where? Okay, the 15-minute chart. Doji, which is an indecision candle, you could see that it's more dropping down than it's going up, right? It opened somewhere right here in the pre-market. Choppy price action, double top on the 15-minute chart, started dropping down, indecision candle. So yeah, it could go to the long side, could go to the downside. Now let's take a look at the 5-minute chart. It's right there. 5-minute chart having an engulfing up there, and you're having a new 5-minute low. Normally, if I don't have a new, it don't look at the 1-minute chart, 2-minute chart. After an engulfing and a new low, I put my stop loss at the wick. I love it when I see stock going to green and from green back to red. This is a good confirmation for me. Now let's see the smaller time frames, right? The confirmation candles. 2-minute chart, an indecision candle, or actually sort of a reverse hammer right there with a selling pressure, upper wick right there. 1-minute chart. Okay, we did actually review this trade, right? For someone else. 3 confirmation candles and a new low right there. So yeah, that was perfect. And then partials all the way down. Yeah, this was amazing. Adrian, for me, trading only one setup is way better because you'll be able to pay attention to that setup. I closed my email, that's bad. Okay, because you'll be able to pay attention to that setup. You'll be able to identify the perfect setup from the bad setup. If you are trading a lot of setups and you don't pay close attention to them, you could just taking the bad steps, the setups which look like they might work or might not work. When you're trading only one setup, you know exactly what you want to see, and you will just let the market do whatever it does. You'll let it go to the upside, you'll let it go to the downside, don't care about it. Okay, this is good. You won't care literally about it. Now look at this LRN, it's going down there. Do I regret not getting into this thing to the short side? Because it went parabolic, it made a new 1 minute low, and now it just went without me. I don't really care about it. It was a parabolic reversal, but look at this. This is a candle on a success webinar. When I made it, I told the members that I don't take parabolic reversals after hammers. If they go without me, I don't care about it, and I'm totally fine with it. I'm calm right now, no FOMO, no regret, because every time I see a parabolic move and after that a hammer, I just ignore it. Sometimes it fails, sometimes it works, and I know that it fails more than it works, so let it just work out right now. Next time I see this and I avoid it, I might get saved from 1 hour loser. It's actually called the hanging man when it's at the high of the day, and the hanging man is a reversal pattern or reversal candle, or a candle which indicates a reversal. But on parabolic reversals, I noticed that it's not working as often. Maybe there is something else beside the hanging man I need to see as confirmation. Maybe a daily level, maybe volume. But yeah, I don't think for now I see they fail more often. Yes, Ivan, I was still able to catch a BCD pattern. One thing about the BCD patterns, they are forming. It takes a long time for them to form. Sometimes they don't work out immediately. It takes hours and hours of waiting, or maybe hour and a half of waiting before you finally catch the good ABCD pattern. And you need to pay attention to a lot of stocks at one time so that you don't miss it. Watching only 3 stocks when I was trading ABCD patterns was not enough. So now I'm having the 1, 5, 2, 15, 30 and the daily chart. When I was trading ABCD patterns, I was watching like 6 stocks at one time. 1, 5, montage, time and sales. 1, 5, montage, time and sales. That's what I was doing so that I don't miss them. And when I was seeing that something is actually forming an ABCD pattern, I was adding the 15-minute chart on it, and I was paying closer attention to it. So NWIG, let's see what it did right there. Traded Tesla at 10:20 on the 5-minute chart. Unfortunately, I can't see the 1-minute chart, and I think the 1-minute chart is important for entries. But look at this right there. This was your entry. I think a better entry would have been at a new 5-minute high. If you want to catch it for a reversal, the better the entry, the tighter the stop loss, the better the risk to reward. The later the entry, you can't have a tight stop loss. You can't put your stop loss at this daily level, even though it did work out in this case. But you could see that this daily level is not respected, and it could have just simply wicked below it. So the best stop loss here is the new 5-minute low, or at least the low of the buy. Now this is a huge stop loss, right? First partial, if you just consider this huge stop loss right there, is so early. Even the second partial, right? Because the risk to reward is not there. Maybe you base your entry on the 1-minute chart and put your stop loss somewhere right there, which at least is making some sense. Right here, I wouldn't have taken it because it's like 1, 2, 3, 4, 5th continuous candle, uptrend candle. Right here, it's decent, and this is decent because now you're having a 3-bar play, a wide bar candle, small candle inside it, and then a new high. At least here, yes, it's continuous candle, but you're having a setup right here. It's similar to here, if you take it to the long side right there. Actually here I wouldn't take it to the long side because of the 9 and the 5. Never go against the 9 moving average on the 5-minute chart unless the 9 is your target, or there is a pattern forming against it. So yes, this is 3-bar setup, but I would avoid it. Like this 3-bar setup, it's decent if you take it to the long side here, a little bit late right there, but I see that everything did actually work out for you, so good job. First trade in simulator, and it was a winner. Good job. Yeah, I see. I mean, you will work out on partialing or holding with time. For first trade, a winner, it's really good. Remember, you need to catch good entries. You need to let your winners run. If your stop loss is wide, if you had it, remember you always need to have a stop loss. you need to let your winners run just to have a good risk to reward. So let's take a look at a couple more trades since we're having 10 minutes more. Ken traded PDD. I guess this was a parabolic reversal. This wasn't bad, right? You see stock downtrend, then with now pullbacks, extended from the 9 and the 5, double bottom on the 1 minute chart, double hammers right there. You take it to the long side, stop loss right below the bodies or that previous wick down there. This is a good risk to reward. You held it, I guess, for a bigger move, which it didn't make, made a new 1 minute low, and you bailed on it. Next time, it got again extended from the 9 and the 5, reversal candle, doji, new high, taking it to the long side, stop loss slightly below the wick since it's wicking right there, and then just hold on to it. But this was an early par exit, right? You just bailed on it. Do you always bail on a new 1 minute low? I personally wouldn't have bailed on a new 1 minute low right here. It's either a get target right there, or I would hold it for it to get me stopped out, because sometimes they do make a double bottom and then work out. Similar right here, it works out, then sometimes they could make a double bottom and work out. Yes, this would be a loser instead of it being a small winner, but the next trade you catch could be a really good winner. That's why I usually respect my stop loss, unless there are 3 reasons when the stock is going against me. Emma, do you have any book recommendation for better trading? Recently read Volume Price Analysis that Thor recommended. Want to know if you have a book recommendation. To be honest, not really. What I like the most, Daily Trading Coach, Trading in the Zone, Andrew's book, Volume Price Analysis, and just the Market Wizards. Market Wizards is just a book. It's like an interview with successful traders, not day trading book. It's telling you the stories behind each success that everyone has. Not everyone, but most of them, they were having like huge losses. They lost a lot before they became consistent, and it's just an encouraging book which helps you to persist reaching the goal of becoming a successful day trader. You will see that it's not only you who is struggling and starting with bunch of losses. Everyone has been through it, and if you are patient enough, you will make it eventually. Ivan, let's see your INO trade. Yeah, Ken, no, it's not that you have to let them hit the stop loss. It's always important to read the price action, and if the stock is just going against you and you see that it might break down, you don't exit only because you see it's going against you. You exit because you see that the price action, maybe volume, maybe the confirmation candles, maybe the time and sales, maybe the level 2, are showing you that the stock is going to drop down, right? Not only new 1 minute low, the price action itself. A lot of indicators are telling you that the stock might drop down. If you don't have them, for me, I will just let the stock hit my stop. Because we don't have a technical stop loss for no reason, right? We have it because we believe that the stock might bounce out of there. Now let's see this. INO, you take it to the long side, and look at this, you exited so early. Remember, when the stock is breaking up a level, it usually either runs up or the previous resistance starts acting as a support. In this case, if I take it to the long side right here, for a break pre-market, I'll just give it half of the candle, just to give it some room in case it wicks down and then goes up. Yeah, this was so wide. For this is a momentum play, this is a breakout play, right? You don't need to give it so much room. The best thing or the best stop loss to have is when you are playing momentum is half of the candle or the technical level or previous technical levels. It would be both would be somewhere around there. And when you say let the winners run, what are you looking at when you are in a trade? What are your main criteria for not selling until there is a reason to sell? I'm still working on holding. It's not that I'm always letting them to run. Let me show you my SPCE trade, and I'll try to explain this quickly there. SPCE. You could see that I also partialed early. It's always good to let your winners run, but I usually start partialing at my risk to reward. I start partialing at around 2.9 or 2.8 hours, somewhere right here. I took a big partial right there, and I was left with 50 or 30 actually percent of my position. Partial more at the 9 on the 5 and right there. And usually it's better, especially if you are in a trend trade, to take your first partial at a new 1 minute low. When I take a partial at a new 1 minute low after this candle, usually I don't care about new 1 minute lows after hammers. I care about new 1 minute lows after reversal candles. Doji, shooting star, I don't know, some reversal candle. Here it's dropping down, continuing the uptrend, no reason to exit. Like right here, this is a good place to start considering partialing. It made a double top, second top with a fake breakout week, and a new 1 minute low. So that's a good reason to just start taking partials. Now look at this on the 5 minute chart. It's making a new 5 minute low after a reverse hammer on the 5 minute chart. Not a bad place to take another partial at. It's going up. Now since it's starting to uptrend, you could pay close attention to the 1 minute chart, but there is no reason to pay attention to the 1 minute chart. Pay attention more to the 5 minute chart and how the trend is going up, closing as a hammer, still new 5 minute low. Okay, I'll take another partial right there. Uptrending, no reason to partial right now, no matter what you see right there, unless it's going to make actually here you could take a partial. Why is that? It's making a reverse ABCD pattern with a W shape. You see, there are always reasons to partial, but there is no reason to exit. If it's dropping down right here and it's breaking this level, now this is the place where I would exit 100% of my remaining of my position. Why is that? Because I'm having a setup forming against me. I have a reverse ABCD pattern forming against me. I have the M shape, and it's actually working because it's breaking the pivot point right there. Now that's a reason to exit. If not, you could just simply continue holding on to it. And that's what I did. I was watching this price action right there. I didn't do those partials right there because I had so small share size right there, around 30 shares left only. It's not so much. And I decided to exit only if there is a setup forming against me and it's working, or I hold on to the pivot point of the high of the day, just to teach myself to hold on. And that actually worked out. It will not work out all the time, but if you leave a little bit of your shares to run, maybe for now it's 30 shares, next time it will be 10 or 15% of my position, you will make a good winner outfit. I mean, would you still consider that pre-market level a good technical level when price already broke through it twice? If it's bouncing out of it after breakout, yes. If it's going through it up and down, no, it's not strong level. So yeah, that's it, guys. Do you have any questions? Well, if not, have a good day, everyone. I'll be in the chat room. My losing streak was 3 days, Goncalo. I think it was a couple of months ago, but the biggest losing streak I had, I think it was 3 or 4 days. It was horrible. For now, like the past 2 months, maybe, I had 1 day loss. I didn't have like 2 days in a row. It was only 1 day. I just continued trading it because I knew that my setup is consistent. My winners on winning days were bigger than the losers. Sometimes they were at my max loss, but I knew that I should not continue trading after I hit my max loss. Once you hit your max loss, just stop out for the day. Don't go deeper. And I knew that I just need to wait and be patient for my steps. And by the way, when I had those 4 losing streak days, it's not because my setups weren't working. Like on 2 days, especially the 3rd and 4th day, I broke some rules, so I was fine with it. The first day, it was like a normal losing day, it's fine. The second day, so-and-so. 3rd and 4th day, I was breaking some rules, so I deserved the loss there. The 5th day, I just managed to come back and it became better. So yeah, have a good day, everyone, and next trade review session will be on Thursday, 12 p.m. Eastern, still here in the classroom.